Hello, welcome, welcome back, everybody. I hope everybody's um, been having a good day. It's definitely been a crazy day for the market, and it's been a crazy day for not just the market but the entire world. I would even say, Russia invaded the Ukraine, and invaded the Ukraine and made issue warnings to people, right? Other countries that if they help, Russia is going to retaliate. So definitely shook up the market a lot. So, but with that, let's take a look at what the market did today, right? And for those who are joining for the first time, remember, I keep my schedule of Tuesdays and Thursdays, 10 p.m. Eastern. So please come join me. And if you haven't already, I do run a YouTube channel. You can get alerted. Come join me on there. But as we always start, as I always start, I look at the heat map of what has happened today. Just gives me a clue because I'm not a day trader, so I usually don't know too much of what's happening in the market other than what I've heard. But just seeing today, we see that tech, consumer discretionary, communication services, tech, all led the day today. Healthcare, was there too. Industrials, right? Uh, what slumped today was financial, energy, a little bit of quite a bit of consumer staples, right? And so with war, especially with Europe, a lot of energy is in Europe, right? Gasoline, natural gas, and so it's only natural that they're slumping today. But I saw this morning, it was a pretty crazy morning. So let's hop into the chart and look at it. So we can see today was a huge green day. We didn't see any, basically no resistance from no resistance at all, no selling pressure. Um, I think I would believe a lot of that is due to people covering, right? We did open a huge gap down, right? Open close to 410, and we went all the way from 410 all the way up to the high of 428 today. Um, if we were to look at the pattern that we were paying attention to for the last few days, right, this pendant shape, I think this pendant shape did break down, right here. Right, we were paying attention to that, and Monday, right, Monday was here. Well, actually, Monday was not open, so Tuesday, Wednesday, Thursday, right. So we broke down below this pendant shape, but to the downside. So we could come back and test this as resistance. I would even say we probably try to test the 200 before we would go and test this right here. Right, that's resistance. So the 200s right here. So around 240, 440. I mean 440. Right, right. So tomorrow we are, looking at the daily. When we see a break like that, we want to see what exactly is going to happen tomorrow because this is what we're paying attention to. So we're here, right? Found some support this level, for sure this level, right? 410, 420, we bounce from there. Strong bounce up. So maybe we can go and test these highs tomorrow. But one thing is for sure, we are going to have a lot of volatility in the market. Right? Go down to the hourly. So going down to the hourly, we can see it's starting to do, um, it's starting to do, or it's continuing the pattern of, right? This is a continuation here. So maybe this is some resistance right now. For sure, 430 will be. But maybe we bounce out tomorrow. But overnight, what we can do if you are an overnight trader and you're scared of what could happen is we could take a look at futures, right? So SPY, the equivalent of SPY is /ES. So it's open 24/7, right? We get to see not too much action, but overnight, especially during the China Open and European Open, we'll see what it's going to do because most of yesterday's drop happened after market, right? In the early hours, right? Early hours. So we took a look at SPY. So see this drop right here, and that happened in the early hours. So you're gonna see that more in futures. If you for those who don't know, you can pay attention to futures and you'll see that drop. But it's a very fragile market right now. Any piece of news would basically just move it. And what I think happened today was a lot of shorts were covering because they had a huge rundown and huge gap down in the AM too. So people are going to cover it. When they cover it, they have to buy back, right? They buy back, it's going to cause the market to run a little bit. Right? Hey, Kong, how you doing? Nice of you to join me tonight. All right, so that's SPY on the daily. Tomorrow we'll be on the lookout because it's forming this pattern, right? Forming this pattern where it's kind of like a bear flag on the hourly, right? So it's doing this right here. Yeah. So be on the lookout. Could be falling tomorrow. And one thing I don't like about tomorrow is it's Friday. We're going into the weekend, and we can see, a lot of things could happen in the market over the weekend, right? For sure, if there's another attack, or the attacks continue and it's even bigger, crazier, we're gonna see the effects on that on Monday, right? So let's take a look at Apple. Apple have gap down also, huge gap down. See, just a few days ago, it was just right below this 50 day moving average here, but huge gap down, right? So a gap down here and then it bounce up a little bit. So this is definitely not a good sign, right? But it is a good thing if the 200 is holding. But at the moment, I don't know if technicals will matter too much because if it's really news driven and event driven, then we're not gonna all of our technicals here, they'll matter a little bit, but anything goes, right? So we dive down to the hourly. You can see here, right? Down. That's the first bear flag, continuation bear flag, and boom. So maybe we reach a wall right here today. So we have to see if this wall will break. So around 163, right? Because if it uses as rejection, we could probably see another leg down. So heading down towards the 150 again, right? But overall, war is initial reactions to war is always a bearish move, right? You're gonna see it move to downside, but overall, it's gonna be a very bullish sentiment because if war requires production, right, is gonna where there is more production, there's more demand too because war generates demand. But it's going to be some interesting times, right? Let's take a look at AMD. AMD. So I was paying attention to, if not this one, what's this pendant, right? This pendant shape here. And so we were right here on Tuesday this week. went down, so down and then gap up. So my thinking is it could use this as a resistance area. So right around 120, right? But with AMD today, one thing that happened was after market close, it was announced that there's going to be a $80 billion dollar um, shares buyback, right? So when that happens, uh, basically um, the chair or whoever at AMD, the big people who leads it, they decide they want to buy back some shares, right? So the public um, pool of shares that's available for everybody decreases, right? So the market cap decreases by or the amount of free shares decreased by about 8 billion, 9 billion shares total, but $8 billion worth of shares. So they're buying that many shares back, and that could cause stock to run. And we did see that little pop, right? So if we dive down to the hourly, right? So right when it closed and that news came out, it actually caused AMD to shoot up above 18, even though it did dip a little bit afterwards. It did cause AMD to shoot up above 118, and that's pretty crazy because AMD opened close to 102, so right around 102, 103 area, and it ran up, right? Ran up all day, basically very little break. Only about midday did we see a break in price action, but you can see for the most part it was just straight up. Um, and one thing I want to point out that we have to pay attention to is that on the hourly, this 200 has been acting as resistance. And now we just peaked above it, but we did come back. So if this pattern does hold itself tomorrow and this is resistance, we could see it shoot back down. Right. And if let's look at a longer, so this is just 20 days, let's look at 90 days, right? 90 days. So I'm still thinking that it's a continuation of this pattern right here, right? Let's drop here, then we climb, right? So a giant bear flag, right? We hit a peak here. I think this might still be the starter. So we still could see this to the downside again, right? So something like this happened here, right? The initial pop, right? Multiple times, then huge pop back, right? So I think that could happen. It could follow that trend. You can see this whole part right here was, for the most part, it was below this hourly right here. This hourly 200, this yellow line. It did peak above it a little bit right here, but it shot down with with more velocity, and it just kept going. So keep that in mind, right? So here we could come shooting down, right? And it could, that's too sharp of a fall, but that could happen right here. So the time frames that I use for my trades is I actually use the daily, weekly, and the monthly. And most of my trades are a few weeks out. Um, but my bread and butter is selling cover calls and selling puts. Um, lately, I've been getting more on the sell put side because everything's been dropping. So whenever it hits a new low, I sell it even lower, and I just keep going that. So my bread and butter is through selling options, not so much being on the buy side. It's just my cup of tea. It's capital intensive, but that's what I do. But I do like to look at it intraday too. I did link the Discord channel that we do use. So there's a lot of guys that are pretty knowledgeable that are on there, and they all trade together. Every now and then I'll dabble in some day trading, but not much. I like to stay in the weekly, sell weeklies, because I don't do this full time. I do I trade and I do my day job, so just in and out of the market here and there. All right, let's take a look at NVIDIA. So definitely a breakdown of the pendant shape, right? The pendant shape that we've been following, but not, right? It's boring, but break down below here, and it tries to come back right up above it. So I don't know if for sure if this will be considered as a break yet, because we did bounce back up into the pendant. So I want to be careful, but it is sitting right at the 200. So the 200, if it does break, will signal even more bearish move to the downside. At the moment, I think it just can't catch a breather at all. Well, we've been seeing these things where it's just a day up, a day down, a day up, a day down. It's just red, green all over the place. See this here, right? Let's go to 90 days. Right? And like AMD, I think this is the continuation of this bear move right here. Right? The first big one that lasted a few weeks, right? And then we took a breather. And so we're probably going to continue to the downside. So this is just looking at the long-term, short-term, shortish-term picture of things and what I'm seeing, right? Because we saw this move here, and then sort of slowed down where there wasn't really a catalyst to move it up, but people taking profits and everything. And I think right now we're in the start of this right here, right? The start of this. So we're right around here in this drop. So we still have another bit, right? And that was a sharp drop, right? It gapped down overnight. But you could see, I don't think we're out of the woods yet. And because when we're diving down into the hourly, it's still not showing any bullish signs to me. Bullish signs, my technical is very simple. So I use the 50, which is this purple line, and this yellow line, which is the 200. Okay, so a bullish sign to me is when I see a true cross, right? Cross over to the 50 crossing over the 200 and staying over, right? If we see something like this where it crosses over but then keeps dipping down, that is a sign of weakness to me. Consolidation sign. Where I see bearish move is something like this, right? Where it's just 50 under the 200 and it keeps going on down, right? So every time it pops up to above the 50 or close to 200, right? It depends on the stock, because some stocks they'll trend better, right? It depends on stock, so you have to really look at it and see what it follows. But for NVIDIA, the 200 pays a lot, but you can see the 50 gives you more entries, right? Every time you short it close to the 50, right? And then bullish signs, I look for something like this, where it's 50 crosses over the 200 and it stays over, and then my entries is as close to the 50 as possible, right? And the 200 if I want to be a bit more riskier, but allows me to stay in even longer, right? So my technical is very easy like that. So with this, that's still really, this right here is still really a bearish sign to me, even though we're going to go down to the downside even more. So I would even say that this would probably be a good area to short. If not, have it test the highs again, right? This high, right here around, um, that looks like it is 238, 239, right? 238, 239. This will be a good area to start if it retests it, because my thinking is it's going to continue to the downside here, right? To the downside. So that's AMD. Let's take a look at Amazon to see what Amazon's doing. And this is not a good thing for Amazon. So I follow this range for about a year and a half now. Right? This big range, and I was playing it. But we just haven't been able to keep above this range. Right? We came back strong today, but we still haven't broken back into the range. So we want to be very careful, especially if we're playing with Amazon. Amazon's a very expensive stock, so any move on it is gonna be a killer move. You're gonna see, like, just for an example, today was about a $200 move, right? So on average, you see some anywhere between $100 to $50 move days, and that's pretty average for Amazon. So that's why I do like to trade on the daily for this, because it, you can see how it pays off, and you just got time to let it play out. But here, to me, on the daily, this is a very bearish time. Right? The 50 cross under. This started a while ago, but I was thinking that if it comes back into this range, what we're gonna see is we're gonna see the 50. What the 50 was gonna do was just keep moving back and forth, above and below the 200. But it looks like there's a lot of scare in the market. Right? Traders, investors, all the participants are pretty scared. They're not really wanting to hold these levels. Right? You can see here we go down to the hourly just to see the move, right? Good short too, right? 50 under the 200, right? Good shorting area. So to me, I haven't seen any signs to really start buying yet, especially if you're just trading. But if you're an investor, you're always buying, because your main goal as an investor is just to stay in. So I'm sort of in between. I'm a investor who likes to trade. So more for the downside on Amazon for sure, especially given this chart on the hourly, right? Hourly setup right here. Like, this resistance used to be a long term. This line right here correlates with this right here, long term support that broke through. Now it becomes a resistance, right? Resistance at 3,000. Right? So since Russia invaded today, I would almost expect that this stock was going to be green. And it was, right? Lockheed, self-defense stock. I would even say that it's actually a pretty good time to, we see this range here. It could be a good time to add, right? Popped up here, but we sold off today. Right? We popped off above, try to test that, try to break 400, but unfortunately we just couldn't hold 400. It's a little bit below. But I think if it comes back to the bottom of this range is around 380. This would be a good pickup. nice little swing trade, especially since this stock has been doing the opposite of SPY all year, right? SPY has been going down. This stock has been going up since January, right? So this is the stock that was different, right? And if you are an intraday trader, right, back down to the hourly, I still think it's a pretty good ad. Like tomorrow, we could see it pop up, test this resistance again. So, let me zoom out. Go to 90 days. All right, so we see this resistance right here. This is on the intraday hourly chart right here. So right above it. So tomorrow we could probably take a long position, right? Take a long position and set a stop just right below here. Right below the, so that's right now, that looks about 395 entry. Maybe take $1 down or 50 cents down, however. Right, so the stop right here, 94 or 90, 93, right? Depending on your risk management, however much you can risk, right? You don't want to risk more than that because we're right at, we see, you know, this resistance. We've been testing it a few times. So you're playing it for the breakout, right? So Lockheed could go off it tomorrow. Really depends on what happened today. If only it kept this, today, if only it kept its all its gains, but it actually sold off in the market, right? Sold off in the morning, came down like this, opened here, and then just went down all day. But it didn't keep its gains, but it's not the end of the world, right? Came right back out, right? So tomorrow could be a good day for that. But tomorrow's Friday, so it's not really a good day to open any long term or any swings. So what can happen is you're opening yourself to weekend risk, which that's something you don't want. Definitely want to just take out. If you're gonna open something tomorrow, maybe just stay until like the last hour of the day, or not even that. Just wait until like the last hour and then trade. So then you're intraday trading. So you're looking for like this catch like this, right, to the downside or to the upside. That's it. You're not looking for anything much, right? It's Lockheed. Let's see. Let's look at one more. Let's look at Google. I know for I don't know about you guys, but I've been averaging in on Google for that split. It's just what I want to do with it. I have 2 more orders for it too. So at the moment, I'm sitting at 8 shares of Google, but I'm trying to get a full 10 shares for that split. 20 for one. So then that'll equate to 200 shares afterwards, and I can sell cover calls on them, generate a little bit of income. But you can see, you know, it's trending down like everything else too, right? It's below the 200 right now. It's just at the 200, close today, just at the 200. But just the chart of it's starting to go down too, right? This sort of behavior here. If anything, it could trend down even more. And if not, you could stay at this level, right? 2,500, right? What I've been doing is I've been every $50 since probably 27,000 or actually 28,000. I've been buying every $50 down. I've been buying a share, and so I do hope that it does go a little lower because I do have an order out there for 2450 and then 2400, and it looks like I might get that, but this 2500 here looks pretty strong. So I want to pay attention to this 2500 level. If anything, I can add more to it. 25, but I do want to get it a little bit lower. Right, we'll dive down to the hourly. You can see it's still trending it's still trending down. Right? And just looking back, there has been time that it tested just 200 hourly on its since the beginning of the year. So the beginning of the year when it was trending, started its downtrend. Right. So we'll do that. Go above the 200 a little bit. Right. So this is just sideways trading. But the real moves, these real moves, there's been times where it touched the 200. Right. So the real move here, right? Times I touched the 200. Right. The moves here, times I touched the 200. So on this down move right here, this continuation right here, it being close to 200 and didn't break it is a good time to get in. You see here, right? 200 here. The next day shoots down the next day. So could anticipate that for tomorrow. So we have it come down. Right. So I don't know how low it's gonna go, but if it's tomorrow's a really sharp incline day, we could probably get back all of the gains of today. Right. All of this gain right here could probably get wiped out with one strong move to the downside tomorrow. But and given how we've been doing, I'm inclined to take the downside move more. So more shorting it at open or around 10 o'clock, right? Let the dust settle and then short it. But I just wanted to share with you guys my look of the market, looking at current conditions. It's pretty crazy now in the world, with Russia invading the Ukraine, and we're sort of unknown what we're gonna really do. I don't know if it is a war act for Russia, right? Their declaration, but I don't know if the U.S. is gonna get involved. If it is, the what that does mean for the market is, initially it's gonna be pretty crazy, right? To the downside, when anything is crazy, the market doesn't like uncertainties, so we're gonna decline, but eventually we're gonna go back up. So if you're a long-term investor, just slowly buy in, right? And my recommendation is, break up your break up. If you want to donate, we could talk about that later because I don't right now. I'm just doing this for I'm just doing this, not expecting anything in return. But it is it is good, but that you guys want to donate. But I'll let you guys know when I do have something set up. But right now I'm just doing it so that I can spread awareness so that we can learn and talk about current conditions and what to look for, and when something hits, we are aware. But that, I'm gonna close it out. It's been half an hour, so I hope you guys stay safe tomorrow in the market. It's gonna be pretty crazy. This whole year has been pretty volatile, so stay safe. It's Friday. Don't open yourself to any weekend risks, unnecessary weekend risks that you're not ready for. And stay safe, and hopefully we get we as a nation find a way out through this crisis, or if we're gonna aid them or not. But stay safe, everybody. Trades well, make lots of gains. Have a good one. Good night.